Okay, so my name is Suhaila Lasky, and I am a grants financial analyst with the Office on Violence Against Women in the Grants Financial Management Division. I know that's a lot. Grants Financial Management Division is, we shorten it by calling it GFMD. So if I refer to that as GFMD in the future, it's just the name of our finance team. So welcome everybody. Today I am joined by my colleague, Michael Sterling. Hi, Michael. And he is going to answer any questions you have in the chat box throughout the presentation. And I also want to encourage people to, throughout the presentation, ask questions. You'll receive an answer in the chat box, but we're going to take a pause about every 15 minutes or so and go through the questions and answers verbally as well. So you don't have to continually monitor the chat box for your response. I do want to encourage everybody to hold any questions related to the systems. I know that it's new, and I am sure that there are a lot of questions about getting into this system or working your way through the system. So if you could please direct those questions to the help desk, that would be great. We're really going to focus on financial management for this presentation though. Thank you. Okay, so what do we do in our division? Oh, actually, one extra piece, I'm sorry. For your questions, please feel free to type them in the chat box in either English or Spanish. They will be translated either way. So thank you very much. So our division, what do we do? How do we help? So we are involved in all aspects of financial management through the life cycle of your grant. If you recall, when you applied with your grant, you were asked to provide responses to various questions. Those were the pre-award risk assessment questions, and we reviewed those responses and assessed any potential risk, maybe asked you a few follow-up questions. We also review and approve award budgets. So you hear from us during the budget review process as well. And we provide a lot of training and direct technical assistance, which is part of what we're doing right now. We review your grant adjustment notices, which are actually now called grant award modifications. And when we get back to normal life in a post-COVID world, we will be reviewing again conference cost requests. We work on policy and developing financial regulations and rules for our OVW grantees. We're involved in audit resolution, and we also help process award closeouts. So we have a lot of involvement through the whole life cycle of your award. We have a few help desk numbers. The first one is our division, the finance team. So if you have any financial related questions, feel free to give us a call or email at the number and email address provided. That is the OVW GFMD help desk. And then the next one is the OVW Just Grants help desk. And that was formerly the OVW help desk for our old system, which was GMS, as everybody recalls. And last is the ASAP help desk, and that is the new financial drawdown system that replaced the old one. So if you have any questions once you're in ASAP and navigating through it, then you can contact their help desk with your questions. Okay, so that was a lot about, who we are, what we do, how to get a hold of us. But what we really want to focus on for our presentation with you is what is going to be most helpful for our grantees to maintain a healthy grant file, following the rules and requirements that are imposed on grantees, and trying to help us avoid any problems if you guys are ever audited. So the first thing we want to talk about are the federal regulations, and those are the things that every grantee has to follow. And the first one we have is the Uniform Administrative Requirements, Cost Principles, and Audit Requirements. And if you guys remember, that's the one that was called the Super Circular or the Omni Circular. That one is that really large regulations that apply to all types of grantees, like nonprofits, institutes of higher education, local governments, and so forth. So that one is really the highest overarching federal regulation that grantees follow. The next one is the DOJ Financial Guide, and that is applicable only to DOJ grant recipients. But really, it is based off of the Uniform Administrative Requirements. So they are pretty much in sync for a lot of things, but it's going to be a lot more specific to our DOJ grantees and instances that are common for our specific programs. And the last one we have here is the program solicitation. And for this one, it is very specific to your program and your project. So in this, you might see much more specific guidelines that are relative to the scope of your project, and they might talk a little bit more about the allowability of costs for your specific program. So going back to the Uniform Administrative Requirements, they talk in that regulation about what is a standard for cost. There are various things that we consider when we review a budget, and the first is whether or not costs are allowable. So for example, let's take the cost of a computer and examine the standards of cost for that item. And so the first is whether or not it's allowable. So going back to that computer, is it allowable for the program and under the administrative requirements? Yes, computers are generally allowable. Is the cost then reasonable? So is it a $5,000 computer that sends astronauts to the moon, or is it $900 and accomplishes everything that your staff person needs for their daily activities? Next is the cost necessary and allocable. So if you are looking to purchase a computer for a staff person that isn't in the office, that doesn't use a computer, that maybe they're just helping with some outreach and never uses a laptop or computer, they wouldn't need it in that case, so it wouldn't be necessary. But on the other hand, is it for an advocate who needs to enter data in for their case files, and they use it regularly for the functions of their work? So in that case, it would be necessary. And if they work 100% of their time on the grant, then you can allocate 100% of the cost to the grant. And vice versa, if they maybe are only 50% of the time on the grant, then you would charge only 50% of the cost. So those are the main considerations we take when reviewing costs. And there are a few others. We want to make sure that the cost is claimed against only one award, that it's not being double charged, and also that they are permissible under state and federal laws and regulations. So you still have to follow your state laws and other federal laws and regulations. Are you treating the cost consistently between federal and non-federal funds? So for that computer item, you'll follow your same procurement procedures for obtaining that computer that you would under non-federal funds having purchased it, and also federal funds purchasing the item. So it gets treated the same all around. And lastly, you want to make sure that you're not shifting any costs to either overcome funding deficiencies. So if you lose one grant and you need to continue to pay costs for staff, and you don't want to move them over to the OVW grant just because you need to hold on to staff, but they actually have to be relevant to that project. And also, you would not be able to shift costs to avoid any restrictions on one award. So let's say if your cost of rent isn't allowable under one grant, you couldn't charge that portion of rent on this grant. Okay, so we'll talk a little bit about why these are important, why it's needed to follow all of these regulations. The biggest thing is if you're ever audited for either your regular annual single audit, or even if the Office of Inspector General, OIG, if they came and visited and performed an audit, or if you had a financial monitoring visit. So we'll talk a little bit about what it looks like when they come and what they'll review. And then we're going to go through some recommendations for strong internal controls and good policies to help avoid any problems. So first, the reviews, when you are audited, they will generally assess the entire operation of your organization. So they will look at your accounting policies and procedures. They'll look at your approved budgets and make sure that they are following closely along with your actual costs. And they'll also look to see if you have any excess cash on hand. So they want to make sure that you are not holding on to any funds for costs that haven't actually been expended yet. When they do come, and if they do have findings, the most common finding that they have is a lack of documentation. And that could look anything like missing invoices or incomplete invoices, contracts are missing, receipts, It also might mean that there are either missing or inadequate timesheets. And that's pretty huge because a significant portion of the expenses for our grantees are from personnel and fringe. And so if you are lacking appropriate timesheets, then that can result in disallowing costs that are related to staff time. So we will emphasize throughout the presentation how significant timesheets and other documentation are. Some other findings are that the expenditures on the FFR, which is the financial report, that they don't match the amounts from your accounting records. And that's important to make sure that everything lines up well. Lots of grantees, they either don't have documented policies and procedures, or they're just not updated, and they don't reflect what the current status of policies are. Some grantees, they haven't come through with their budget modification GANs if they have changes that exceed 10% of a movement of funds. But we'll actually have a whole section towards the end about budget modifications and what's required. So if you want to hold your question until that point, that'll be helpful. And last, that they are applying the wrong indirect cost rates to the wrong periods. So that's important to make sure that you are lining those up appropriately. So we listed out what the most common findings are. One thing that we also wanted to point out is what that could result in. And I want to emphasize that this is not a scare tactic at all. We don't want to make anybody scared or nervous that, that you'll be audited and have to return funds. We want to provide this information to you ahead of time so that we can hopefully help build you up appropriately so that we can avoid any of these issues. The very last thing we want is for our grantees to have to return funds. You were selected to carry out this program because you were decided that you had a great project, you're doing great work in your community, and we want that money to stay there. So we want to just help in any way possible so that we can help set you up in a good way to carry out the project. So the biggest thing that would happen is that you would have to return any of the funds for unallowable costs back to us. You could also be placed on the high risk list, and that has a lot of strings attached to it as well. Funds could be placed on hold. The award could be terminated depending on how bad everything is. It could also affect your organization negatively for receiving future funding. And in some cases, if there's suspicion of criminal activity, it could lead to an investigation. And if there are any questions about what's the difference between an OIG, which is the Office of Inspector General, audit versus investigation, that the audit is just if there are maybe some things that administratively or from a policy perspective or costs that we have questions about or that the Inspector General has questions and they just want to look through your organization, then that would just be an audit. But if there is any suspicion of criminal activity, that's an investigation, and there are far less investigations than there are audits. So audits are just the common ones where they do for everybody. Okay, so Michael, have there been any questions that we can go through at this time?
Yes, we did. Excuse me. Yes, we did receive one question. In addition, please feel free to type in your questions again in either English or Spanish in the chat box, and then we'll get you a response to them as well as hear when we stop. One question came in. The question was in reference to if the organization has to have a particular timesheet that they will have to use, or do they follow their organization's general practices for non-grantee staff? In response to that, the organization would select the timesheet that they would like to utilize, but they need to ensure that they have the proper information on the timesheets, and we're going to go a bit more in detail later in the presentation, but you need to ensure that it shows and represents the time worked on a particular grant, or if they have multiple grants, the time worked on those multiple grants. In addition, general information, the individual, a signature line for whoever signs off on the staff's timesheet, as well as if the staff is like the ED or something of that nature who signs their particular timesheet, those signatures should be on there. But again, if you want a sample of a timesheet, just email our help desk, and we will be able to send some sample timesheets that you can utilize as examples in setting up your timesheet for your organization. Sorry, one thing just came in, a response to that. If the position works full-time on one grant, do they need to track what projects they're working on under that grant? If they are working on just one grant, you still want to check their times. Track their times, I'm sorry, but you also still want to at least include some type of activity report. Yes, they're working on one grant, but you just want that additional supportive documentation to reflect what they did during that time if it's related to that grant. It's like Suhaila said, one of the things we will emphasize throughout the entire presentation is documentation. And a lot of times that supportive documentation is very important when it comes to these type of things. And yeah, we have no other questions. So go right ahead.
Thanks, Michael. So now we're going to talk a little bit about setting up your award and what that looks like. So anytime you have a new grant, you should create a new grant file for that. And it can be either a hard copy, like a physical grant file, or an electronic file. It's up to you. You want to make sure that you and anybody else who is working on the project, that they review the special conditions and are familiar with the requirements and all of the pieces that are attached to it. When you accept an award, those special conditions at the end, they're part of that contract that you're agreeing to. So it's important that anybody who is intimately working with the grant, that they are familiar with the pieces that they are agreeing to as part of it. This is a little bit more for the financial people. You will want to create a new cost center in your accounting system and set up a tracking mechanism for the budgeted amounts to compare it against the actual expenditures. And that's a good process to have in general, just so that you can identify the financial progress of the grant, and that you can project your expenditures, or where your costs are based off of categories, if you are overexpending or underexpending in certain areas, that you can project if funds need to be moved around or the activities need to be adjusted. Also, in your award package, make sure that you have a mechanism in place that requires source documentation to be included within that grant file. So in that grant file, you want to keep a copy of the application because it's a huge package that has so much information that's relevant to your project and what you told us you were going to do when you applied. So keep that application in that grant file. Also put in there a copy of the signed award document because that also has the special conditions that we just talked about. If you have any MOUs with other organizations, keep that in there too. Include the approved budget, any correspondence with either your program specialist or your financial analyst, and your financial reports should also be included in there too. And we usually recommend that the general ledger is also included and attached with each of those financial reports. Okay, so quickly just talking about the special conditions. One example that we're including here is probably the most relevant for our office, our team, and that is the special condition that holds funds until a grantee's budget is approved. So we just wanted to make sure that everybody understands what this means. So your award was sent out without an approved budget. So we are advising grantees through the special condition that funds are on hold for drawdown until an approved budget is issued for your award. So you can expend and obligate funds, but you can't draw down over $10,000 until the budget is approved. If there are any expenditures or obligations that were not included in your final approved budget, so if during the course of the budget review anything was removed out of that budget, then you cannot receive reimbursement once the budget is approved. So conversely, any expenses that you incurred from 10/1/2020 until the budget is approved, and those costs were included in the approved budget, you can request reimbursement for those expenses once your budget is approved. Okay, so we talked a little before about tracking your budgeted versus actual expenditures. And what we recommend doing is once your budget is approved, you can set up in your accounting system, if you have software sophisticated to do that, or even just Excel if you don't. And what you want to do is just have a way to track and compare maybe monthly or a reconciliation similar to that frequency. Just compare what your budgeted approved costs were against what your actual costs are throughout the life of your grant. It's important to track this information so you know when you need to come in for a budget modification GAN, or if you are like in this example, we have here the travel and consultants have the highlighted in red percentages, because you can see that they are a little bit of outliers based off of the other percentages. So it looks like travel is a bit higher and consultants is a bit lower than the other percentages here. It does not mean that you're doing anything wrong in this scenario. It is just a little bit of an indicator. Okay, let me take a look and see what's going on here. And it could have a quick explanation that, okay, well, we just took our travel to the new grantee orientation, and we spent a lot of money in the front end of the grant on that particular category, and that's why that's a little bit higher. And for the consultants and contracts that you haven't started working with your partners, and that's a little bit lower because they haven't been reimbursed for anything yet. So it could be a very easy explanation like that. Or it could mean that maybe if you project that you still have a lot more travel events and you might need to move money into that category. It all just depends. So it's a way of just really a tool for helping you throughout your grant, just to make sure that things are on track. Okay, so source documentation. We talked a lot about how important documentation is, and for the reasons that we also mentioned, especially if you're ever audited, one of the biggest reasons that grantees have to return funds is that they don't have the appropriate documentation. And it could look like timesheets, purchase orders, invoices, travel authorizations, or receipts. And there are plenty other types of source documentation, but really it is so important to hold on to your documentation. Anything that's related to your grant expenses, that you should be holding on to that documentation. You don't have to submit it to our office unless we ask for it. So just keep it in the grant file. Okay, we'll pause for some questions, Michael.
Awesome. We got a couple questions that came, excuse me, that came in, and I was getting ready to type them in. So I will respond over with my voice, and then I will type of the answers as well. So the first one that came in was, let me go back. I'm sorry, just going back. First one was, at what point can we hire a position, and if they have to wait for the budget approval? So what that is, the organization, any expenditures within the project period, the organization will have to can expend at their own risk if their budget has not been approved. Because if the budget, let's say, for example, if let's use laptop, say you budgeted for a laptop, you go ahead and purchase the laptop, and then we come back and say, well, that particular item, or let's say that particular purchase is not allowed in the budget, then the organization is going to have to absorb that expense under their own expenses. They cannot charge it to our grant. So again, it is at their own risk that they charge any expenditures prior to the budget approval. So that is something you just want to take in consideration. If you have a grant that is a supplement, a lot of times in that supplemental budget, you have a lot of the same expenditures in the prior budget. We still say the same thing, but you know that you have at least a little bit more of an understanding that these items are similar. So the organization, again, at the end of it all, it is at your own risk until the budget has been approved. And the next question was in regards to just grants and drawing down an ASAP. We recommend that everyone that if you have any questions in relation to just grants and or ASAP or related to drawing down from those systems, please contact our help desk so we can have a further discussion on what type of assistance you may need with those systems. It's just that is so much information with that we could spend this entire presentation just on that, but we have to, Suhaila has a great presentation to do and we don't want to bog it down with just grants. So again, just email our help desk and we will be able to respond back and work with you one-on-one in regards to what you need with just grants and or ASAP. Next question was in regards to expenditures and the FFR. Do we report accrued expenditures posted from 10/1/2020 on the FFR for report ending date 12/31, which will be due at the end of this month, even though they do not have an approved budget? Yes, you do need to file the FFR because they are required to be filed. If the organization has accrued expenditures, you will include that because it's based on what's in your general ledgers. If the organization did not do anything, let's say they were just waiting for their budget to be approved, in your reports would just indicate 0. However, a FFR or the federal financial report is required to be submitted. And the next question was, how do we submit a budget for approval? Is this done in just grants? Again, in the budget approval process, the assigned financial analyst will reach out to the organization, usually to their financial manager, in regards to any questions related to the budget, if we need revisions or anything of that nature. If the budget is good to go, we will notify you that the budget is in the process of getting approved. But again, if you have any questions or you want to get a status update on your budget, please reach out to our help desk and we'll be able to give you an update on the budget approval process. Okay, so I see that is the question for now. Another one came in, but we will get to that one on the next Q&A slot, and I will respond back via the chat box. Thank you. Back to you, Suhaila.
Thanks, Michael. Okay, so we talked so far about setting up your grant file appropriately. And the next thing that we're going to talk about are your policies and procedures. So again, going back to audit findings, one of the most common, second most common audit findings is that the organization has incomplete, out of date, or inadequately enforced policies and procedures. One example I like to give about what it would look like when you're audited and why it's so important for all of these elements to be addressed within your organization is, let's say that when the auditor comes, they look at your general ledger and they pick one small line item like a taxi cost. And they will then require the documentation related to that item, so the receipt for the taxi cost. But because that cost for the taxi was associated with your travel event for the new grantee orientation, they would also ask for a copy of your travel authorization approval and your travel reimbursement request, so like your voucher after the fact. And then they'll also look at your policies and procedures to make sure that every step of the way that your policies and procedures were followed. So from that one small line item, all of those different pieces are going to be tested as well, to make sure that you have all of the documentation, that you have the appropriate approval documented, that you're also following your policies and procedures for each of those steps through the process. So again, policies and procedures, make sure that they're updated, that they're complete, and that people are following them. So what do policies and procedures look like? There are a few important topics that we provided here. Just to highlight some of them, we have conflicts of interest, super important, segregation of duties, and there is a huge emphasis that the uniform requirements put on internal controls and the appropriate segregation of duties throughout your organization to make sure that there are strong checks and balances. Travel policies should be in there, reporting, subrecipients, record retention. So all of these that are listed here are important ones to make sure are included in your policies and procedures. And we'll talk about a few of them. Okay, so for your policies and procedures and your accounting manuals, they should be complete and comprehensive, documented. So not just, well, this is usually what we do. It needs to be documented in those policies and procedures. It should be updated regularly. And what it looks like is going to be relative to the size of your organization and your budget. So it isn't going to be an exact mirror to every other organization with the Office on Violence Against Women. It's going to be relative to your size and budget. And why are these important? Your policies and procedures, they outline all of the rules and methods for your organization. It helps support strong financial management systems with good internal controls, uniform processes, and all of that will hopefully result in reliable financial reports. So if everybody's following the same processes appropriately, it is presumed that your financial reports should also be correct and avoid any issues with that type of audit finding. Within your policies, they should also reference the specific documents that are required for each process. So for example, under personnel time and tracking, you would reference the timesheet document, or for procurement, you would reference purchase orders or invoices. Another example would be for your travel policies. You might reference the travel authorizations and travel reimbursements. So just a reminder, again, you don't have to submit any of this to us, only if it's requested of you. And just keep everything on file. Okay, so policies and procedures should have built into them strong internal controls. And these are when you have a good segregation of duties, or strong checks and balances, things that are in place that help safeguard your assets. It also provides effective and efficient operations, and you always know who opens the mail and who reviews the bank statements and who signs off on checks, so that there is always a different eye on different pieces of that process, so that it isn't one person doing all of those things, which could leave an organization open to a potential situation of fraud, waste, or abuse. Okay, so we're going to talk a little bit about cash management and financial reports. Okay, so our grantees work on a reimbursement basis. And so what that means for anybody who's new with the Office on Violence Against Women is that the organization incurs those expenses first and then comes for reimbursement from the Office on Violence Against Women, from OVW. So there should not be a situation where you have cash on hand. If you are requesting reimbursement after the expenses are already incurred. If you do need an advance, then you can request it, but those funds should be dispersed within 10 days or less of receiving them. So we understand that there are different sizes of organizations for our grantees. Some have, less cash flow, so they might need to request funds in greater frequency or even an advance, knowing that their payroll will run immediately after that reimbursement, after the advance is received. But what we do is we also perform quarterly excess cash reviews, and what we do is compare the amount that you have reported in your financial report against the amount that you have drawn down. So sometimes we actually identify when grantees haven't drawn down, and sometimes we find out it's because of an issue that they have accessing the drawdown system, and we can provide technical assistance at that point. And other times we do find out as well that maybe a grantee drew down too much funds and that they need to be returned because they don't anticipate expending them right away. One of the biggest questions that I get on the help desk is, what amount do I report on my financial report? And we always advise grantees, the amount that you report are your actual expenditures from that period and not from your drawdowns. We have access to the reports for your drawdowns, but we don't have access to your general ledger or your financial system, so we can't see what your expenditures are on your end. So we need grantees to report on their expenditures, not on the drawdowns. Again, it should be pulled, that information should be pulled from your accounting systems. And there is a big shift for our grantees who have previously had awards with us and that is that we no longer have a section on the report where you show just the amount of expenditures for that period. You are now in line 10E, going to show your cumulative expenditures. So from the start date of your award up until the end of your reporting period, your total cumulative expenditures. And just one other note, that if you receive a financial monitoring visit, that they do also compare your financial reports to your general ledger to make sure that everything lines up appropriately. So again, it's important that you are basing this information off of your internal accounting systems. So reports are due 30 days after the end of the quarter. The final report is due 120 days after the award end date. And that's actually a shift for Office on Violence Against Women grantees who have had previous awards. If you remember, your final report was due 90 days after the award end date. They moved it on November 12th. If your award ended after that date, then you have 120 days now instead of 90. So anybody that's on this call that's a new grantee for this 2020 award, any award that ends at this point now, you have 120 days to submit your final report. But that's a long time from now, so you don't have to worry about that anytime soon. Your financial reports are quarterly. They are submitted in Just Grants, and your financial manager, who is assigned to your award, will be the one submitting it in the system. Okay, so we're going to talk a little bit about travel policies and procedures. We talked already a little bit about what an auditor would look at, and we used the example of a taxi. And that would fall under your travel policies and procedures that you should be following. So these should be documented, and any cost related to travel should follow your travel policies. If you don't have travel policies, then you will be using the GSA, which is the General Service Administration, federal travel regulations. And what is important to keep with that supporting documentation is all the pieces that are relevant to it. So from the very beginning, you should have your travel authorization, which is what you would use to identify the travel that you need to take, get approval from your supervisor, lay out the expected costs that you project, make sure that accounting department has the money slated for this event, all of those pieces related to the authorization on the front end. And then on the back end, after you travel, you'll also need to hold on to that reimbursement form or your expense report related to it. And then also any receipts that are required based off of your travel policies, those will also need to be included with that travel event as well. And just as a reminder, credit card statements are not sufficient supporting documentation. They just generally say a total amount and a date, and it does not generally have sufficient information to support that cost as source documentation. Okay, travel policies and procedures, the approval and authorization before your travel, those policies should identify, how far in advance do you need to get your approval? Like, we have to make sure that it receives approval at least 2 weeks before the event. It should also identify who approves the request. How is approval obtained? Is there a form that needs to be routed around? What needs to be included with that request? Like for Michael and I, when we travel, we have to include an agenda, and it's going to say, what day we're presenting. So our travel should line up with those dates. And also we have to break down all of the estimated costs. So your policy should address each of these pieces for the authorization before you travel. And then for the reimbursement after you travel, your policy should address who you submit that reimbursement request to for approval. What documentation do you need to include in that request? And when do you have to submit it by? So again, we have 2 weeks after the travel event that we have to submit our request for reimbursement. And in that, it will also identify what reimbursement goes directly to me as the traveler versus our travel card. So all of those elements are included in our policy and in the process that we follow. Okay, so we are going to talk a little bit about personnel and time and attendance, policies and procedures. Again, this is such an important piece. If you have any questions about getting a sample timesheet, our email address is at the bottom on this screen. Reach out to us and we'll send you a sample. But the elements that are required to be identified on your timesheet are listed in the uniform requirements that we talked about in the beginning of the presentation. But basically, they should clearly document the time and effort of that person. So it will show where their time is being spent. Okay. The full time of that person should be accounted for on that timesheet. So if they work for 8 hours in a day, but they only spend 2 hours on this grant during that day, it should be identified 2 hours for this grant, and then the other 6 hours should also be identified on that timesheet as well. So they're accounting for their full time. And in that same example, if they work 9 hours tomorrow or the next day, and 3 hours on this grant, 3 hours should be accounted for on this grant, and then the other 6 hours on whatever the other activities are. But basically that all of their time is accounted for. And what you end up charging to the grant, it should match those timesheets. So you're not basing it off of your budgeted amounts. So let's say you anticipate that somebody spends 50% of their time on the grant. You wouldn't charge 50% just because that's what they budgeted. You would charge based off of their timesheet. So let's say that month it was 46% of their time. You would charge 46% or 54%, which is higher than what you budgeted. You charge 54% because you're basing it off of actual time. make sure that your policies and procedures are updated to reflect what your current procedures are. And there should be internal controls to ensure the accuracy. So if that maybe means having the supervisor sign off who has direct knowledge of that person's activities, then they would be the ones to sign off on that person's timesheet. Okay, we're going to take a brief pause for questions that came through. And I want to thank everybody so far for all of your really good questions. We really appreciate it. It always shows us that our grantees are really ingesting this information and carefully considering what we are presenting on. So thank you very much again for your questions. We really appreciate it.
Yes, and we did have a good amount of questions that came in. Thank you, everyone, for bringing up these questions. Excuse me. So let me just make sure I go back and get everybody. So the first question that came in was in relations to, in regards to filling out the FFR, the Federal Financial Report, when it comes to a new grantee and then what should be included. As we indicated before, if you have any expenses, any expenditures that came in to the organization during the grant period, so let's say, for example, if you're a new grantee, your grant started on 10/1/2020, and even if your budget has not been approved, and let's say you still started incurring expenses, you're going to charge it to the grant, you will need to include it in your federal financial report. As Suhaila indicated, it is based on the information that is in your general ledgers. So you want to make sure that you are adding that information in the federal financial report. With the system, with just grants, you are able to update your financial report. So any changes that you may need to do, you are able to make. But if you want additional assistance in regards to how to complete the report in the system, email our help desk and we can have a talk with you in regards to filling out the report and just making sure, you know, everything that needs to be entered is entered properly. Next question that came in was in regards to travel policies. If our university's policies include that you will only need receipts for over $75 of reimbursement, for example, like taxis or purchases and stuff of that nature, will they still need a receipt for $10? Again, the grantee will need to follow their policies and procedures regarding to the receipts or the reimbursement documentation that is needed. So if your policies indicate that only receipts over $75 are required, then you will follow your policies. You just want to make sure that if it is items under 75, again, you want to make sure that they are if you have some policies in relation to how would you handle items under 75. And again, if you want more clarification, if you want something a little more stricter, or if you want to see if your policies fall in line with the federal regulations, you will want to go onto the federal travel regulations to see how they handle reimbursement receipts and stuff of that nature. Another question came in, do institutional policies and procedures cover the requirements, or is the requirements for policies and procedures something just for OVW, Office on Violence Against Women? So the policies and procedures that we were speaking of today in regards to, you know, the importance and kind of what you should have in your policies and procedures is for your organizational wide. So the institution's policies and procedures should fall in line, because you will have to treat, just like how you treat your federal grant money, also your non-federal grant money has to be treated equally. So you need to ensure that your policies and procedures addresses all the necessary requirements, because the information that we're providing today, we're doing that based off the Uniform Administrative Requirements, as well as any other federal regulations that we have, as well as OVW. So you want to make sure that you have your policies falling in line with that, and it is for the entire organization. We had a couple questions related to travel. Oh, we had a question if today's presentation recording, it will be available. Yes, it will be available. There is a link in the chat box that's been added where you will be able to download the recording. Another question in regards to the travel authorization form. Is this a organizational form or a grant form? Again, this is based on the organization's policies and procedures. The organization should have something in place to show when prior to travel, if the staff member, how do they get approval for that travel, some type of documentation reflecting the approval of the travel, and that travel reimbursement is one of those items. So the institution should have something in place to show that information, as well as for the approval when the staff member has come back and is getting reimbursement. And one other big question is related to credit card statements. As Suhaila indicated, credit card statements is not a valid source of documentation. Reason being that credit card statements will not be as detailed as a receipt or an invoice. I know some credit card companies may break down a bit more information in their statements. However, the invoice or the receipt gives us the most cleared information. It tells you the date. It tells you the person. Let's say, for example, like a hotel receipt. You know, the hotel receipt will explain the cost for each day. Will show you the individual that was in the room. That will show you if there was any additional costs connected to the room, the date in which they checked in and checked out. So that gives you more information. A lot of times your credit card statement is not going to give you that entire breakdown. So credit card statements is not a valid source documentation. There are very rare occasions where that will fall in line. But again, if that comes into play, you will probably want to communicate with our office just to see why you will need to have this credit card statement. You will need to provide just some type of explanation on why the organization has to utilize a credit card statement. Maybe you're unable to get a copy of the receipt, or if you are unable to hold on, or something may have happened and you can't get additional information, and the credit card statement is your sole source of documentation. And yeah, and that is all the questions. So right back at you, Selena.
Thanks, Michael. So thank you, everybody, for bearing with us so far with this presentation. I know that financial management of awards is definitely not the hot topic, high interest presentation. So we are very grateful for your continued attention. Unfortunately, we're going to get into some pretty heavy conversation that is, believe it or not, even more boring than the last hour. So hang in there, everybody. Thank you. We are going to talk about a topic. It is subrecipient and contractor determinations. It is really important to make sure that grantees are appropriately issuing agreement tools that align with either subawards or contracts appropriately. And there are a lot of reasons why it's important. One of them being that in the requirements that are associated with either a contract or a subaward, they're very different. And there are other reporting requirements that are associated with each as well. So that's why we just ask that This is taken into consideration before your agreement tools are issued. Okay. So to give some context, all of our grantees, or a lot of our grantees, have partners, and that is where you work with another organization in your community, and you work collaboratively and towards the same goal. They sometimes carry out a portion of your project. Unfortunately, the regulations don't have a specific agreement tool called partner agreement. You either have to issue them a subaward or a contract, and that goes for any organization that you work with outside of your own. So we are going to talk a little bit about what each of these mean, either a subaward, which is issued to a subrecipient, or a contract, which is issued to a contractor. So subawards, they are issued to organizations who help carry out some of your program activities. On the other hand, a contract is issued to an organization or a company to which you are just procuring goods or services, and that also includes consultants. The substance of the relationship and the nature of the work that they're providing is more important than what you call the agreement. And I just specify that because one of our grantees that I've worked with in the past, they call everything a contract, but the actual agreement tool when working with a subrecipient is clearly different than a procurement contract. So those agreement tools are very different, even though they call everything a contract. Okay. So a subrecipient is a non-federal entity that receives the subaward through your organization, and they carry out a part of your project. On the other hand, a contractor, they receive a contract to purchase property or services needed to carry out the project or program from your award. Okay. And we will look a little bit at what we recommend grantees do when they are making this determination. The federal regulations, they detail out in 2 CFR 200.331, they will specify exactly what the determinations are what the characteristics are for a subaward and a contract. So we recommend that grantees develop an internal process where this decision-making process is documented. So what that means is, based off of the federal regulations, what they identify for the characteristics of these two agreement tools, that the decision-making process is documented by the grantee that is based off of those characteristics. One thing that we were talking about for a second was why it's important. So if you determine that you are going to issue a contract, then you follow your procurement procedures, which is different from a subaward, which does not follow your procurement procedures. And as we know, following your procurement procedures is in a competitive bidding process, but when you're working with a partner and issuing a subaward, you're not bidding out or competitively procuring those services. You're just identifying an organization in the community who you know can carry out this part of your project. So when you're issuing a subaward, you do not follow your procurement procedures. So it's important to identify on the front end if it's a subaward or if it's a contract. You also need to make this determination so that you can figure out if you need to include any of the conditions on that agreement tool. So if you issue a subaward, you have to pass through those award conditions, and they need to follow they need to expend those funds in a similar manner as you as the actual grantee. And also, you want to make sure that you are properly negotiating costs if it is a contract. So there's lots of different reasons why it's important to make this determination on the front end. Another reason that I just thought of was that you have reporting requirements for subrecipients. So again, lots of reasons why you need to make the right or the appropriate decision-making process on the front end so that you are also doing the appropriate actions afterwards and following the regulations and doing everything you need to be doing. Here's a brief chart that just goes through some of the different types of either subrecipient or contractor based off of the characteristics. The MOU partners are generally considered subrecipients. So if you're curious about that, I wouldn't say it's 100% of the time, but I would say like pretty close. That if it's an MOU partner, generally they are also going to be a subrecipient. Again, also for subrecipients, you will ensure that the federal program requirements and terms and conditions are also passed through and apply in their agreements. The funds that subrecipient receives does count towards their audit threshold, which is $750,000 in federal funds received for that fiscal year. That you are reporting them for the FFATA. Michael, can you look up what that fully stands for? I'm sorry, I always forget because we acronym literally everything. So the full terminology is lost on us sometimes at some point after looking at it for too many years. But yeah, it is, yeah, sorry, go ahead.
Oh, sorry. I'm sorry. And FFATA means it is the Federal Funding Accountability and Transparency Act.
Thank you. I appreciate that. So basically, if you issue a subaward over a certain threshold, that you are required to report on that just for transparency so that anybody can look up on the website to see that the subaward is issued for X amount of dollars. So that does apply to subrecipients. So it's important to know, am I issuing a subaward or a contract so that you are appropriately following reporting requirements? Again, with the subaward, you are reimbursing them for actual costs. And that's different from a contract. And I'll give an example. Let's say that you are working with the local a local organization for an advocate position to help with some caseload. And you will pay for the portion of the advocate's time and the associated fringe benefits some of their travel costs or supplies. So you're paying them for their actual costs that they incur for the advocate. There's no upcharging or profit that's being made off of that. It's literally just like what you do, that you charge us for your actual costs, and we reimburse you for them. And they're doing the exact same thing. Conversely, with the contractor, that's their business model, is to make money. So let's say that you need to update your website and you contract out with a company that does just that, and they charge you X amount of dollars for the update or based on an hourly rate. And included in that cost is their profit margin, their overhead costs, and you don't necessarily know exactly what all that is, but you know that you're paying the right price because you competitively sourced that cost. So you looked around and got some quotes or bids for that cost. So you know that it's a reasonable cost, even though you don't know exactly what's included in each of, everything that's included in that, but you know that it's reasonable. Okay. So they're very different ways of approaching the cost for each. The next thing on this list is procurement standards. You will follow your procurement procedures for contractors, but you do not follow them for subrecipients. That's very important. Sole source, that applies to contracts, but it doesn't for subrecipients because it's sole source is part of procurement, and subrecipients or subawards do not fall under procurement procedures. And last, a profit may be earned under a contract, but not under a subrecipient, because you are reimbursing a subrecipient for their actual costs that they incur, and they would break them down for you just like you do in budgets for us. Okay, we're going to pause here for some questions. Have any come through so far, Michael?
Yes, we do have a couple of questions. There was a question that I missed in our prior break, and the question was in relation to per diem. If anyone would like to see the per diem for your state or wherever, well, not for your state, or wherever the staff member will be traveling, I have included the link in the chat box. It's going to be on the GSA Travel Regulations website, and there you're able to enter the city and state in which you will be traveling to, and it will indicate the per diems, as well as like the hotels, per diem and lodging and all of that. So on that GSA website, I have included it in the chat, in the chat box. Another question was in relation to, and let me just go back to make sure I get the proper question. If we spend non-grant funds on grant-related activities, do we need to track or document this at all? And I may have needed more information on this, but based on the question, it looks like if you are utilizing general funds to cover expenses related to the program, yes, you will still need to track that in your accounting records, in your documentation, because you would just want to be tracking everything related to the activities being done by the organization. In relation to the federal financial report, the report should only reflect expenses related to OVW funds. So when you indicate the information on the federal financial reports, that should be based on the OVW grant funds, because if you see on the report, the report will only indicate the awarded amount. And if your report is indicating more than the awarded amount, then that falls into matching, and then, no, not even matching, that would fall into program income. That may go into a more deeper situation. But I believe that is the response to the question. If that is not the response you were looking for, feel free to text back in the chat box and we could go more in detail. And another question that came in was in relation to subrecipients and contractors. First one was, we have a community partner and some grant funds will be used to cover some of their grant required travel. Would they be a subrecipient? And then another part relations to that question is, if we purchase promotional items for the grant, is this considered a contract? So as Suhaila indicated, the termination is going to have to be made by the organization. When it comes to indicating a subrecipient, between a subrecipient and a contractor, you want to utilize the slide that we just showed previously. Is very useful in that. A lot of times, as Suhaila indicated, MOU partners or those partners that you work with in the organization, they will most likely be subrecipients. So usually that's their travel costs, and any costs connected to them will be considered that, but you want to make sure that you go through the proper steps to ensure that you're making that determination. And when it comes to purchasing promotional items and stuff of that nature, that sounds to be more of just general expenses. So those would just be like general expenses unless you are, let's say, contracting with a company that will provide you these particular items on a regular basis. That's like, for example, partnering up with Staples and they'll give you office supplies on a regular basis, or a copier, you're leasing a copier or something of that nature. That will look to be more as a contract instead of a subrecipient. And let's go down. And another question was, if a subrecipient purchases equipment to support the project, should that be included in their budgeted line item or in the general equipment line item? So any expenses related to the subrecipient will need to be included in the subrecipient's budget line item, or in your budget, it will fall under the contract consultant subrecipient category of your budget. All of their expenses will have to be basically slotted all together. The only items that will be in the other categories of your budget would be for direct expenses to the organization. So in the general equipment category or in the general supplies category, that should only be reflecting equipment or supplies directly related to the organization and not for any subrecipient or contracts. And then we have one other question in regards to where they can find the federal financial report. Again, that is something that is done in Just Grants. If you want more information, more detail on how to get that done, please email our Grant Financial Management Division help desk, and that's where we can respond back and give you more details on how to complete that report. And I will include our email in the chat box again, so you can just email us and we can go more in detail there. Thank you for all the questions again. I'm liking these questions. You all making me work. And if you all see my video, it looks like I'm talking to myself. Sometimes I have to read out the questions to respond. But again, thank you for the questions. Back to you, Suhaila.
That's funny. I did see you talking to yourself earlier. All right. Okay, so we're still on subrecipients and contractors. But regarding the contract portion, we're going to shift the conversation a little and talk about the procurement policies and procedures. And these would be followed when you issue a contract. It is the process that is used to obtain goods and services from an outside vendor. So like Michael gave an example earlier with Staples or with any other, office supply store, that you would be working with them via a contract. So make sure that your procurement policy is documented, that those specific policies comply with CFR, and that's the Code of Federal Regulations. And that's, again, that big uniform guidance that we talk about from the very beginning of the conversation. The specific section that we're listing here is for procurement, which is 200.318 through 200.327. It's a section all about procurement. You should be checking sam.gov and that's the website. You would just type in sam.gov for any vendor or consultant prior to issuing them a contract. So add that to your policies and procedures, that you're always checking that. You want to avoid any conflicts of interest. Your procurement procedures should be consistent across the board, and that is whether it's federally or non-federally funded. So everything should follow the same procurement procedures. And you want to allow for free and open competition. If you have a large ticket item that might be either leased or purchased, just make sure that you provide an analysis that identifies the most cost-effective measure taken and breaks everything down. And if you have something in your budget that needs a lease versus purchase analysis, we'll let you know. So you don't have to provide it for everything. We'll let you know if you need something. Maintain all of the records detailing each procurement and your any of the decision-making process, or if you obtained multiple quotes or bids, or you researched 3 different companies for that cost, whatever research you did, include that with the contract for that specific item. And any if you have any sole source contracts over $250,000, just make sure that you receive prior approval. Again, subawards do not follow that requirement because you are not following procurement for subawards. A contract should outline the payment terms, and you want to avoid obtaining any unnecessary or duplicative items. And a quick note about outlining the payment terms, make sure that you're considering all aspects of the cost that contractor might incur. Let's say that you are working with a speaker and they may have travel days or prep time or whatever the case is, that you are considering all of those pieces and it is identified in the contract and also included as part of the negotiation. I think it's on the next slide, we talk about consultants, and specifically under consultants, because we see a lot of speakers and trainers for this program. So we just wanted to highlight some of the recommendations, but also requirements as well. But so to go over quickly, what's required is that the rate needs to be reasonable compensation for that consultant. It should be based on that individual consultant's experience and education and the current market conditions. If their rate exceeds $650 per day for an 8-hour day, which breaks down to $81.25 per hour, then you need prior approval for that cost. And we emphasize that the $650 per day rate is a threshold, and it is not a standard OVW, Office on Violence Against Women rate. So once you exceed that amount or anticipate exceeding that amount, you need to get prior approval. So a couple of things to note on this specifically is that, again, the $650 per day is for a full 8-hour day. So if you have a speaker that is projecting only maybe 3 hours, which includes their travel time to the campus and their speaking time and, you know, any follow-up time that they give for questions, everything. So if it's 3 hours total, then you would multiply the 3 hours by the $81.25 per hour to determine if they exceed the threshold. Also, when determining if a consultant, you know, when you're trying to figure out who to go with for a consultant, we know that there are various considerations to make. Most specifically is making sure that you are working with a consultant who provides the best service. So it doesn't necessarily mean that you have to go with the cheapest person. If the cheapest person doesn't suit your needs, then you don't have to go with them, but you do have to document why you went with a different consultant, you know, that reasoning with everything that you keep on file. But one other thing that I was mentioning is to make sure you are considering all of the associated costs. Let's say that somebody has a higher rate per hour, but they don't have any travel costs because they're local, versus somebody who has a lower hourly rate, but they will be flying in from out of town and need lodging expenses and days for travel reimbursements. So take all of those pieces into consideration when you're looking at your consultants, and make sure that all of their costs are included in the negotiation, but also their contract as well. And just last, to emphasize one more time, because we see in our budgets across the board, we'll see $650 per day for everybody. If you have that as a budget placeholder or an amount that looks the same across the board as a budget placeholder, but you actually are charging based off of these pieces that we have lined out here, then that's fine. You would just say that in the budget narrative that, you know, this is just for budgetary purposes and the actual cost is based on blah, 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 everything we have listed out on this slide. Okay, so we are going to move into policies and procedures for managing and monitoring subawards. So we just talked about procurement, which is for contracts. Now we're going to talk about subawards for a little bit. Okay, so if you're asking yourself, what is a pass-through entity? That would be you. If you issue a subaward, you are the pass-through entity, because you're taking some of the federal funds and you're passing them through your organization to another organization via the subaward. So anytime you see pass through, that's just what it's referring to. Okay, so what are you required to do if you issue a subaward? First, clearly identify that in the agreement that it is a subaward, and there is a litany of elements that are required to be contained within that subaward agreement, and we listed them, the source in this bullet, to CFR 200.332A. You will also be required to evaluate that subrecipient's potential risk. And that's the same thing that we did when we asked you those questions during the application process. If you recall, there was that list of 10 questions for the pre-award risk assessment. And it was so that we can get an idea of what your financial systems look like. What is your capability for managing federal funds? Do you have policies and procedures? Are they updated? Do you have timesheets for staff? Like those kinds of questions, so that you can get an idea of does that subrecipient have the capacity to carry out that subaward? You can also consider the following: their past history with other subawards, if they had any findings and audits, whether or not that subrecipient has new staff or new systems that might concern you. What is the extent of their results from any sort of monitoring? You can ask them about that, if they've had any findings or any recent monitoring. I want to emphasize that it does not mean that you can't subaward them, just like it means that it doesn't mean that we won't award a grantee if we have any questions. It could open up a conversation with that entity. You could talk with them about some of your concerns and address it with them, or you can impose additional restrictions or requirements, like maybe you can ask them for extra documentation because you want to just double check things. So I don't want to discourage you from issuing subawards because maybe they have like one small thing that you're not comfortable with. You can have that conversation with them and impose additional restrictions if you feel is necessary. And that's to protect you and us, just protect everybody. Same like with contracts, you'll also check sam.gov before issuing. Make sure that they're not excluded or debarred. You can, like I mentioned before, add any additional special conditions based off of your risk assessment. You can verify that the subrecipient is audited if they're required, if they had met the $750,000 threshold. You also should be monitoring their activities and any financial performance or reports and audit compliance. So they hopefully are submitting to you any sort of reports because you're also including that information in your progress reports and your financial reports. So just make sure that they're submitting all of the reports that you're requiring of them and that you're comfortable with what their progress is. And if necessary, you can take enforcement action if they are not complying. Okay, so for subrecipient monitoring, you'll want to make sure that you are monitoring your subrecipient so that they're using the award funds for the intended purpose, that they're complying with all of the statutes and regulations, and that they are actually achieving their performance goals. So take a look at their financial and performance reports, that you address any deficiencies with them, or add any additional monitoring visits that you feel are needed, and that you, if you do find anything, that you are issuing a management decision. So you just want to make sure that it is formalized if you are working with them on any, anything that any issues that you had with them. So like we were mentioning before, just depending on the results of their risk assessment, your monitoring may also include additional technical assistance or training for them. You might add some on-site monitoring as opposed to like desk reviews, and that you arrange any agreed upon procedures. Okay, so that if you guys are, agreeing to work on XYZ, that it is also, that you are also arranging that. Okay, we're going to take a brief pause for questions that came through.
Okay, so we did not have any questions. Oh, sorry. So we did not have any questions that came in since our last break. Just one in regards to the link to the to this recording, which will be included in the chat box in a second. And yeah, so other than that, you can go ahead and continue, Suela.
Thank you. I hope I didn't lose everybody on that last one. It's a lot to go through. The whole conversation about subrecipients and contractors. And if you, after the presentation, want to chat about it a little bit more, we're open for that conversation. Send an email to the help desk, give us a call, we'll help you. I think one of the takeaways is that really that determination process is ultimately going to be up to the grantee, because we can't tell you, well, A, we don't have all of the information that you have. Like, you're always going to have more knowledge about the work and the relationship with that organization. You're going to have more knowledge about the ins and outs than we do. So we're never going to be as knowledgeable as you are to make the appropriate determination. And if there are any questions about the determination that you did make, if you document that process, then you have that to show if there are any questions about it. So you'll always have that to support why you made the choice you did. Okay, enough about subawards and contracts. We're going to talk about grant modifications. And for anybody who has had an award with us before, you might remember that they were called grant adjustment notices, but they are now called grant award modifications. And that is shortened by GAM, which we call GAM, because again, we acronym everything. So these are all processed ingest grants, and that's our new system. The grant award modifications that come through our office, the financial team, those are budget modifications, and if there's a change in the grant project, period, like if you are extending the award. Okay, so when is a budget modification GAM, grant award modification, required to be submitted by grantees? So there are three reasons why you would submit this. The first is a change in scope, and that is when there is a substantive change or shift in your project. The next is when you move funds into a category not previously approved, and that means if it had $0 in that category, so like if you had $0 in equipment in your approved budget and you move $1,500 into that category, because it was approved with $0 initially, you will need to come in for a budget modification. And the last is if, and this is the most commonly known one, if there is a cumulative change greater than 10% of the award amount. So if your award is for $300,000 and you decide that you don't want to spend, $31,000 from your consultants and contract category, and you're going to do those activities in-house instead, and move that into personnel and fringe, then you would need to come in for a budget modification GAM, grant award modification. I know I get a lot of questions on this one, so feel free to put them in the chat box in either English or Spanish, and we will address any questions you have about this specifically. Okay, so what do you need to include when you submit a budget modification request? First is attach the revised budget. The level of detail has to be similar to what you originally included in your approved budget. So the same budget that you submitted with your application, that level of detail with cost breakdowns and narrative to support each line item or justify each cost, that has to be submitted with that level of detail. And it has to account for all of the costs for your award. So not just the ones that haven't been expended yet, but your total $300,000 award for that same example. If you have indirect costs and are using an indirect cost rate agreement, include that and any other previous rate agreements that coincide for the same award period. And just to give you an idea of the process, first, the budget is reviewed and approved by your program specialist, and then we get it in our financial team. So what that means is your program specialist will review it for programmatic compliance and to make sure that it's still in line with your approved project. And then we get it, your financial team gets it, so that we can make sure that you are compliant with all financial requirements. Okay, so we'll talk a little bit about closeout and record retention. And I know this is like a million years from now that, we're not going to test you on having to remember this one small piece of this one small presentation 3 years from now when your award closes out. But we do need to have the conversation and talk about it. So just bookmark this presentation at this point for when your award closes out, just so that you remember. So when you close out your award, first you will need to make sure you're submitting your final financial report, also submitting your final progress report. Make sure you've complied with all special conditions. You'll also complete a financial reconciliation, and we'll talk about that in a minute. And all of those pieces for the closeout package should be submitted in Just Grants, which is our new system, within 120 days after your award end date. That is a shift for grantees who might remember that used to be 90 days. Okay, so just keep in mind that just make sure you comply with those requirements, because that can be taken into consideration for future funding decisions. Okay, financial reconciliation. What that means is that we are, and you, that we're all looking at basically what your final report expenditures say, which is from your general ledger and your accounting system, and compare it against your drawdown report. So we can determine if we owe you money or you owe us money, and the right people get the money back, right? So if we owe you money, then draw down the rest of the money within that 120-day period. If you owe us money, just give us a call, send us an email, and we'll give you instructions on how to return those funds. Okay, record retention. Hold on to your records, anything that is pertinent to this grant, for like financial records, supporting documentation, anything relative to the grant, for a period of 3 years after your final financial report is submitted, or the closeout of any open audit issues. And again, like we discussed before, you can either hold on to your records electronically or a hard copy, and just make sure that they're accessible and confidential. Confidential records are secured. Okay, last we have, I'm sorry, I'll pause for translators. Last, we have here a list of resources, and the first one is the Electronic Code of Federal Regulations. And this is the link to the uniform guidance that we've been talking about this whole time, that 2 CFR 200. That is this link here, and we just provide it to grantees so that you can access it easily. The next one is the OVW Solicitation Companion Guide. The next is a link to the Department of Justice Financial Grants Management Guide. The next is Creating a Budget, Training for Office on Violence Against Women Applicants. This is a really good training for creating a budget, because we didn't talk about that here, about how to create a budget, or what a budget should look like, because we have an entire webinar specifically on that topic. So I recommend that anybody who works with the budget, or if you're doing a budget modification, to take a look at that link. And we have some Just Grants training resources. So if you're having trouble with the new system, click on this link. There are 1,000,001 resources, whether they're user guides or webinars or videos. There's tons of things that are out there to help. And the last one is online training for basic, comprehensive grants financial management. And this is that really long one that used to be offered in person, but we were able to create with that in-person training, we were able to create this online training. So you have access to this at any time. There is no limitation on the amount of people who can register. You have 1 year to complete the course before it recycles and you have to start from the beginning again. But this is the website. We definitely recommend if you are new to grants or new to our office that you take the training when you can. And that actually concludes our presentation. So Michael, have there been any additional questions that came through?
Yes, so we did have 2 questions that came through. The first one, and let me just go back and just make sure I did not miss any of them. Okay, so the first question was in regards to indirect cost rates and budget modification GAMs, or grant award modifications. And the question was, are they required? Is a budget modification GAM required for an indirect cost rate? In the changes with the Uniform Administrative Requirement, a budget modification GAM is not required for an indirect cost rate agreement as long, sorry, let me rephrase that. I'm sorry. If the grantee is making changes to their indirect cost rate or indirect cost rate agreement, if it meets one of the 3 requirements for a budget modification GAM, then that particular grant award modification will be required to be submitted. If it does not meet one of those requirements, a budget modification will not be submitted, and the organization will track the changes internally, or if they want to reach out for the program manager just to ensure they get more of approval or anything of the changes, contact the program manager or the financial analyst here at in our Office of Violence Against Women, and we can save that in our files as well. And then the other question was in relations to making changes to the budget prior to the budget being approved. If your budget has yet to be approved, please send the revised budget to the program manager. Reason being is the budget has not been approved yet, so it has to go through the budget review process. With that, it goes to the program manager, and then they send it over to our team and the assigned financial analyst will then receive that budget, and then we will go ahead and do our review of the budget. So the organizations will not be able to submit a grant award modification because there is no budget approved in the system. So it will give you an error basically saying that you cannot submit this GAM because there is no budget in the system. So you want to make sure that if you make any changes, please follow up with your program manager. Please do this as soon as possible because, like I said, it is a process that we go through, and we want to make sure that we review and approve the most recent and up-to-date budget. Because if you make changes and we approve the budget, then the grantee is going to have to go into the system and submit a budget modification GAM. And a lot of times that will take some time because it goes, also the budget modification GAM does take time to get approved. So again, any modifications to your budget prior to it being approved, please send it over to the program manager as soon as possible to get reviewed. And with that, that was all the questions. Again, I would like to thank all the grantees for sending in all the questions. You all had me working and typing, and I like it. Keeps me on my toes. Thank you for all the kind words for myself as well as Suhaila. And Suhaila, I'll let you go ahead and close us out.
Thank you. My mute, no. Thank you, Michael. And yes, no, thank you to everybody for your attention. I know that financial management of grants is not a very exciting topic. So we truly appreciate your attention. I know I love it, and I'm sure Michael loves it too, but but we're very grateful. We hope that this information was helpful and that you take it and, ingest it, and that you continue to do great work in your community and your school. So thank you very much. Give us a call or email on our help desk if you have any other questions. Thank you, everybody.